Well, hey everyone, and thank you once again for tuning in to another episode of the Sage Investor Webinar. I'm your host, Jin Wang, and I'm joined by our special guest today, Omar Khan.
Hello, everyone.
We're going to get to know Omar better shortly. But first of all, for those who don't know us, who don't know the Sage Investing Group, just want to do a little intro. We are three women, as you can see in the picture, and we're all former Big Four auditors turned full-time multifamily syndicators. Our mission is to empower other risk-averse investors to diversify their portfolio with cash flowing and appreciating assets, such as apartments. So if you're interested in working with us, we encourage you to set up a discovery call on our website at sageinvestinggroup.com. Now let's get started. Today, I'm excited to have Omar Khan, founder and managing partner at Boardwalk Wealth, join us as our special guest. I have to say, Omar, I love your name. I love not your name. I love the Boardwalk Wealth name.
Well, thank you for not liking my name.
I like your name too, actually. Anyways, I love Boardwalk Wealth. I think it's such a clever name for a real estate investing firm. So great job on choosing that. So Omar currently lives in Dallas, Texas with his family. His firm's mission is to connect passive investors to B and C class multifamily real estate opportunities. And Omar has over 10 years of global investment experience and has participated in capital financing and M&A transactions valued at $3.7 billion. He has also syndicated large multi-million-dollar real estate deals across the US. And he is also a CFA Charterholder and a global citizen, having lived in Dubai, Toronto, and Calgary. So now, before I hand it over to Omar, I just want to share today's agenda really quick and the key questions that Omar is going to cover with us. He's going to go over 3 key questions and probably add a little bit more to that too. But the 3 primary ones are why US real estate and why multifamily in particular makes sense for international investors. Who are the professionals that need to be involved for foreign investors to invest in the US? And what are some best practices for both foreign investors and sponsorship teams looking to accept foreign investors onto their deal? So at the end of Omar's presentation, we're going to open up the floor for questions. You guys can either raise your hand and unmute to speak, or you can just type it into the chat box and we will address them at the end. I hope that as investors or as co-sponsors, you guys are going to walk away more knowledgeable about how to invest in US syndications, or as syndicators, just how to help your foreign investors access these great opportunities that you guys are offering. So welcome, Omar. Thank you so much for taking the time to be with us today.
Thank you.
I'm going to go ahead and let you take it away, and you can start off by telling us a bit more about Boardwalk Wealth.
Sure. So let me share my screen first, so that'll give you an idea. So some of the stats here about my company might be dated because we're closing on a few deals, but I mean, you'll get the idea. Basically, guys, my background, I'm from Pakistan. I was born in Dubai, raised in Pakistan, lived in Canada for the longest time, got experiences all over the place, moved down to the US a few years ago. And basically, my background is in running and structuring deals on the institutional side. I was doing a lot of corporate M&A, advisory, all of that sort of stuff. And how I basically, or rather how we started in this business is, my family's been in real estate for 3 generations. So, I mean, I kind of grew up knowing about commercial real estate investing, tax benefits and all of that. My family's fairly financially sophisticated, right? But for us, the biggest deal was we had a tax issue, a good one. Like, we had a lot of gains from a legacy real estate investment through one of our trusts, and I wanted to shelter those gains. And, you know, I had no intention of being in real estate, to be very honest with you. We wanted to shelter the gains. We just, I called up everybody in my network, put a deal together, did that deal. Primary purpose was to shelter the gains. And, then after that, it was just doing one good deal after the other, right? So there was no grand plan of, hey, I just want to do real estate for the rest of my life. It was just because I had a good background, a decade plus on the institutional side, running and structuring deals. So this was just, I guess, a natural evolution of had a problem, solved a problem based on previous experiences, right? That's basically how we kind of got started. right? So we can look at this content, table of contents. I'm going to keep things high level right now. And I want to go through this presentation, but the idea, I think, where people really take benefit from something like this is when you ask your questions, because I can present you a framework, but till you don't ask questions about your specific issue, like maybe you're having an issue, right? Or maybe you thought about something, till that time, the framework, it's clear, but it's not really that clear, right? It's like taking theory and then actually implementing and practicing it, right? So this is a little out of date. We're close to about 1,400 units now. We've got 3 property sales. You can see we've got healthy returns. We're always overshooting whatever we promised. We were formed in late 2018, as I told you. Tax issue was a big thing. First couple of holdings were in Texas. We've now expanded into Florida and Georgia. We also do developments, by the way. I've got a couple of them going on in South Dakota with a very good partner of mine. So for us, the whole purpose when we were doing this, number one, was to shelter taxes, but also for us to realize that, what do we do basically in a tax efficient manner that's going to take our dollar the furthest? Because the issue that we were realizing, and people in our social circle, and I'm sure some of you or most of you would have this issue, is that the more money you make, it's nice, but you're paying so much money in taxes. Let's assume you make 500 grand a year. I mean, you're paying a couple of $100,000 in taxes, and you're always on this hamster wheel, right? You'll never get out of this hamster wheel if you never fix your tax problem. And a lot of times people assume taxes, they don't really think of this as an expense. You can't do anything about it. But if you actually break down your gross income and kind of take the various components out of it, you'll realize taxes are your biggest cost or expense, however way you want to call it. So you really have to focus there, right? And that was one of the big impetuouses for us. So that kind of gives you an idea. Our company culture, we're very transparent. You always have access to principals like me. We're at a stage in life where we just don't have to do deals just to pay the payroll. We've got a good track record. So basically for us, it's what's more important is long-term relationships and how can we be a good steward of our capital and yours as well. Because frankly, in most of my deals, if I'm not like in the top 3, I'm definitely in the top 5 biggest investors per deal, 3, 4, 5 times a year, right? Kind of gives you a big high-level idea. Basically, now, okay, the big thing, why US real estate? Because let's assume you live in Dubai, or you live in China, or you live in Russia, or England, or Australia, or South Africa, or Brazil, wherever. Why have people specifically been so attracted to US real estate? And then specifically, why US multifamily? Because presumably, if you live in these foreign countries, you are a person of means, you've got money to invest, then presumably there's no shortage of options in your own home country, and it's probably easier for you to access this thing as well. So look, the US is the biggest economy in the world. No surprises here. And not only is the biggest economy in the world dollar-wise, it's also got a big, healthy population. Because one of the problems a lot of rich countries have is, I'll give you an example of Canada. Canada, relatively speaking, is a rich country in the grand scheme of things. The population size is very small, right? It's like 33, 34 million people. California has got more people than that. So most of the rich countries in the world, they're rich on a per capita basis, but they just don't have a big enough population. So the laws of big numbers don't really apply to them. Now, commercial real estate in particular is a huge chunk of the economy. Right now, it's conservatively valued at $16.2 trillion. So not only are you in the biggest economy, you're in one of the biggest sectors of the biggest economy. So you will always have opportunities, right? Because let's assume you could be in America, but if your opportunity size is only $100 million, it's going to be pretty hard for you to do deals. But if your opportunity size is $16.2 trillion, there's always ways to find inefficiencies and do all of this stuff. Now, this is a typo. This should be billion. I think I kind of forgot to put that. So FDI inflow means foreign direct investment inflow. So you can see this kind of gives you an idea. $250 billion worth of foreign money is directly invested into America. That gives you an idea of the perception of America as an economy, because it's a safe, stable economy backed by the rule of law. And then basically why commercial real estate is so much in demand internationally. And amongst commercial real estate, US multifamily is considered the gold standard, because we're rapidly going into an era of our lives, or however you want to call it, where the perspective has become that we want to rent everything. We don't want to purchase stuff, we want to rent everything. So if you're a landlord, that's really good, because you have increased demand year over year over year. Then on top of that, unlike a lot of other big rich countries that are facing some level of either population growth slowing down or negative population growth in the case of places like Japan, The US is still a young country and the population is continuing to grow. So again, if you're a landlord, people want to rent, the population keeps growing, you have this tsunami of demand, right? And then you're able to better pick and choose. Then on top of that, because multifamily and commercial real estate in particular is considered a very safe, stable asset because it's asset backed, you've got something, right? For instance, think about it this way. You might have a really great software company, but you go to a bank and say, look, I want a loan. It's very hard for a banker, and no offense to bankers, bankers aren't the most creative people on the planet. You know, it's very hard for them to say, okay, what do you put up as a collateral? Because in case your business doesn't work, what will happen to our money? But in the case of, say, real estate, they've got something physical and tangible, which they can say, okay, you know, in case you don't pay me the money, I've got something that I can take over to recover either fully or partial the amount of money that I've lent you. So because of that, banks love lending to multifamily. It's way more secure than single family. And that's why you're able to get easy access to debt. That's a very important component because a lot of these deals wouldn't work out, the returns wouldn't work out if debt wasn't available at such historically cheap rates and also available so easily. So you've got this tsunami of effects that are propelling this industry forward for the foreseeable future. That's why people love it. That's why it's so attractive, and $250 billion every year is invested, right? Now, we're going to come to the meat and potatoes here. Like I said, I'm going to keep this high level to provide you a framework so you can understand how does a regulator or, how should you be thinking about it? And then what I would like is, if there are any questions, you ask a question and then we can apply that framework to the questions to answer whatever the problem is. So why should you basically be looking for international investors? Well, number one, it's a diversified source of equity for sponsors. Think about it this way. You know, you're a sponsor, I'm a sponsor, Jin is a sponsor, right? And we, let's assume, are only talking to American investors. Well, if the same investor hears from me, from you, from Jin, from 10 other people, it's pretty hard to stand out. But presumably, foreign investors aren't going to be hearing from 10 and 20 and 40 and 30 and 80 sponsors. They're going to might hear from 1 or 2 sponsors just because these types of transactions are still very much on a relationship basis, right? You can't go to your Vanguard account or your brokerage account, type Apple and just, I don't know, go buy all of Apple's real estate. It doesn't really work like that. So therefore, for you, it's a diversified way of equity. Other people aren't getting it. So this way you can basically get another source of equity. But it also provides a unique offering for you to stand out. You can say, look, man, it's all relationships based, where I'm selling you access. This is why you can get into this deal with us and get all these great returns that you're not going to get access to. It's not even a case of money. Even if you have all the money in the world and you don't know people like, say, Jen or me, that you're not going to get access to it. So it's not even a money issue. Then on top of that, because of the issues that I pointed out earlier, foreign investors crave US commercial real estate exposure because the US is considered the gold standard for economies. The US is also considered a country which follows the rule of law. So for instance, if you're coming from a lot of other countries outside the US, you've made your money, you can then park your money in US and especially US commercial real estate because you know it's going to be a safe, stable, and a great long-term investment. So that's very attractive for foreign investors. They crave that thing. The other issue also is that a lot of people don't talk about is from a sponsored point of view, you're going to realize foreign investors, they typically have lower investment expectations than domestic investors. American investors, for better or for worse, are spoiled for choice, right? Whereas say if you're an investor in Brazil, you want to take your money out, you want to go invest it in the US, you're willing to accept a lower return just because you want to take your money out of your domestic country and invest it into the US. Also, as we mentioned earlier, because this is a very relationship heavy business, just because you have money doesn't mean you're going to get access to the deal. Your foreign investors, if you treat them right, they will tend to be much stickier with you. So they will invest with you for the long term because they're I mean, it's always the case, but they're really investing in you as a person. And it's less of a transactional thing, right? It's not like, hey, this guy's giving me this guy's giving me this. No, it's more of a trust-based mechanism. So for them, if you treat them right, you do the right thing, they are going to stick around with you longer. And that's, by the way, the holy grail. Because think about it this way. When you send your emails out, when you pick up the phone and call your investors, you want your investors to say yes. You don't want your investor to, take 3 months to make a decision. And typically, the only way an investor is going to say yes within 5 seconds is because they have a super duper duper high level of trust with you, right? So now trust is developed over a period of time. But one way for you to develop trust with these international investors is to give them access to something that they would never have, right? So it's a combination of things, right? Now, basically, what type of professionals are needed? And again, I'd like to emphasize, I'm going high level because I want you to ask me questions and then we can apply the framework. So if you think I'm going fast, let me know, but there's a reason for that because I want to answer your questions in the framework. So typically, what professionals do you need? You need a cross-border CPA, right? Cross-border CPA means not just somebody who's well-versed in, say, American tax, whatever, setting up entities, tax, all that stuff, but also familiar with basically the taxes that apply in the country that is the domestic country of the foreign investor. Now, the reason for that is because the US has typically a tax treaty with most countries in the world. I mean, barring some notable exceptions like North Korea, Syria, Iran, most other countries, they have a tax treaty with the US. So there's always professionals. Now you need to go find out that professional. It's not really that hard, but you still need to know. You also need to have, ideally, it's either the cross-border CPA or a US-based CPA that can quickly file for the I-10, which is the individual taxpayer identification numbers and other related docs. And I'll tell you why you want to file for an I-10 and not just, ideally, if you can avoid it, not take money foreign, get the money domestically and then take it, and I'll tell you why that is. You also need an attorney that's well-versed with handling foreign investors in US entity creations, right? Now, the reason for this isn't really something complex. You just basically, if you're filing for your PPM, your LP agreement, you literally have to check off a box that says, I am going to be investing foreign investors. But if you don't say that, you don't check off those boxes and a couple of other boxes, you can't take this money. So again, not that hard if you know what you're doing, but you do need somebody who knows what they're doing. Then, now typically this and this can be combined. Ideally, this can be combined, but it doesn't have to be. You need a securities attorney who's going to basically, like I said, make sure all the disclosures are checked off in the PPM and filings and all of that sort of stuff, right? Again, nothing hard. Don't worry about, hey, where am I going to find this? Where am I going to find this? Don't worry about it. These professionals are available. I just want you to be aware of what's going on. And then lastly, coming down to this last section of this slide, you need to know if you have foreign investors and you are setting them up domestically, right, with an LLC or an LP, which structure to use. So a good example of this is on the Canadian side. Now, 9 times out of 10, for tax purposes, if you're onshore, if you're American, whether you have an LLC or an LP, 9 times out of 10, it doesn't really matter. It doesn't matter to you, right? But say, let's assume you're a Canadian investor, right? It's going to matter because the CRA, which is the IRS equivalent in Canada, don't ask me why they think this way. Okay, I've had this conversation multiple times. They assume that LLC versus LP. With LP, they consider LP a flow-through vehicle, and an LLC, they don't consider a flow-through vehicle. And I'll explain to you what a flow-through vehicle means. Look, all we're really trying to do when we're investing in real estate is that the real estate comes to our entity and just flows to us. Because if you have, say, a C Corp, first, if I, as a sponsor, give you 100 grand in your C Corp, that 100 grand is going to go to your corporation. You're going to be taxed the corporate tax rate. Let's assume it's 20%, right? So let's just do the math here. It'll be 100 times 20% tax. So you're left with $80. Now let's assume you distribute all of that $80 and your marginal tax rate, let's assume, is 30%, just making it up, right? So now in your pocket, you're going to get $56 for every $100 that you made, right? Because you're double taxed. You don't want any of that to happen. What you really want to happen is that $100 comes through into the entity and just immediately flows through to you without that other extra layer of taxes. So as a Canadian, if you're investing in the US, the LP would be perfectly fine if you wanted to invest in an LLC, if you wanted to invest as an entity. But if you had an LLC, the CRA, which is your local tax authority, would double tax you. And that's going to kill your returns, right? Now, again, don't ask me why they do this. This is just one of those stupid laws that's on the books. But the point is, you have to be aware of these things, because you might, if you don't know these small little things, you might make a commitment to your investors and then say a year from now, they'll get the hefty tax bill, and that's going to poison your relationship, right? You don't want to do that. You just want to be aware of these things. And again, you can be aware of these things if you hire the right professionals. Just wanted to give you an idea of what's going on. Look, in case let's assume you've got, I don't know, something from an exotic country. I don't know, name something like Panama. I don't know, or UAE or Qatar or something like that, or Saudi, right? Let's say you've got an investor from Saudi or Qatar, and you're like, well, where do I go find a cross-border CPA? Where do I go find an attorney? Well, a lot of times you can literally call the consulate or embassy and they'll help you out. They are literally here to make sure that they help their citizens help. And on the American side, the American economy wants more money from the outside. So they're not going to put any roadblocks along the way. So if you can't find these people, oftentimes I know it's very easy. Just call up the consulate and embassy. Sometimes you might have to be on hold for 40 minutes, write them an email. They'll provide all this information to you in case you can't find it, right? Just saying you have a source which can just help you do all of this stuff, right? Now, what are some of the best practices? Like I told you earlier, the reason why ideally, this is not mandatory, this is just an ideal best practice. Why do you want for an ITIN or a social security number to be there? What you want ideally is for your foreign investor to basically have a US domiciled bank account. So what does this mean? This means, as an example, that let's assume, I'm going to use the example, and please everybody don't tell this to Bank of America. In my opinion, Bank of America is the worst bank in the world. Okay, they've got the worst customer service on the planet. But let's assume Bank of America has a branch in UAE, right? And they've obviously got branches in America. Now, if you go and open a Bank of America account and in the UAE, it's not US domicile. You could have a US dollar account because you could trade in US dollars through it. It's still physically, I mean, it's electronically, but it's based in the UAE, right? So you want to have a US domicile bank account. Now you can tell your bank if they have a depository branch in the US, hey, create my account as a US domicile account. The reason for this is that if you don't do this, then you have to withhold taxes. So every single time you make a distribution, you have to withhold 30% taxes, right? You don't want to get into this game. The reason why you don't want to get into this game is because this, number one, puts more burden on you as a sponsor to make sure all your I's are dotted, T's are crossed. But additionally, what it does is you have to go explain to your investors, yeah, you know, I said I was going to pay you $100, but really you're going to get $70 because I'm keeping 30, you know, for the government. That's going to piss off a lot of people, right? So ideally, what you want is a US domicile bank account. It's ideal, not mandatory, right? What you also want is to be dealing with international banks with branches in both jurisdictions. As an example, a Bank of America or a Morgan Stanley that has a branch in, say, London and a branch in America. Or for instance, they have a corresponding branch where a local bank will have a relationship with an American-based branch and they'll do business that way. Again, it's not mandatory, but it's nice when you have it because it smoothens up a lot of processes, right? Number three, rather. You also ideally, again, want to be in a country or in a jurisdiction from which the investor can wire you money easily and you can receive money easily from there. So for instance, if the investor is wiring you money from Syria or Iran, you're going to be in a lot of trouble. Okay, don't do that, right? So, or for instance, if you're in a country like India, India has currency controls. So even if your investor wants to send you the money, they first have to go get approval from their bank, which goes to the National Bank. I think it's the Reserve Bank of India. They go there, they get approval, and then they can send you the money. So if you're under a time crunch, let's assume you've got 30 days in which you've got to go raise money. And it takes a government 30 days just to give your investor a response, well, you're going to be in trouble. Right? So you just want to know these things, that if there are currency controls, if there's issue, then you need to know this much in advance. But if there are no currency controls, or if there are currency controls, a lot of times what happens is people say in India or Pakistan or Russia or China, they create entities in places, offshore entities like the British Virgin Islands, Jersey, Seychelles, Bahamas. Then they transfer the money there. Those are offshore entities from which banking and transactions are much easier. And then it's much easier for them to send you money. It's way easier for them to do it this way. Again, you got to know all these things up front, because when you're in the middle of a deal, you want to raise money, you want to close on time, you've got hard money. You can't let all of this bureaucracy get in the way. You can't let this thing happen, right? And again, like I mentioned, funds ready for investment because bureaucracy can delay in getting funds from one jurisdiction to another. Now, look, as Americans, we don't realize this thing because we think, all right, it's my money, I can do whatever I want. The problem is, it doesn't really happen like that in most countries in the world, right? Because a regulator can tell you, yeah, it's your money, it's our bank. So you go figure it out. If you want to go send it in through the mail, go for it. Don't let me get in the way. So again, I don't want you to be surprised for no reason, right? Again, this is I think Jen can share this with you. I don't know how you could do this, but we can send them the link. I just gave this as an example. This is Canadians. How can Canadian investors and foreign investors participate in US-based real estate syndications? I wrote this article a long time ago. This gives you a high-level idea of how these things work. I have a detailed example for Canadians in case they want to figure out, well, how does this work? Why do I pay more taxes? When do I not pay more taxes? Kind of gives you a high-level idea. This kind of tells you about my firm. But what I'd really like to do is open the floor up for questions, because I think that's where, the rubber meets the road, basically.
Thank you so much, Omar. That was super informative. Definitely learned a lot there. So we have Saket here with a question. Do you want to go ahead and unmute yourself, Saket, and speak?
Definitely. Hey, Jen, thanks for putting this together, Omar. Thank you. And unlike Jen, I do like your name and your company name.
Thanks, man. I appreciate it.
If my accent didn't go away, I'm from India. I'm in the US right now. And I would love to get your perspective. It seems like you've done a few transactions or several where moved the money from India or Pakistan. I'm assuming a lot of those processes were similar.
They have the same issues. It's currency controls, right? You have to get permission. It's not hard, but you know what I'm talking about, right?
Correct. So it's everything is possible, but it takes time. Sometimes a lot longer than I think that we'll have finished the deal full cycle, and then they'll get the approval sometime.
Yeah.
So I think the question I had was, and if it's an offline question, I'm more than happy to connect with you offline. It's going to be, what specific procedures have you used to transfer money or to bring the investors? I think you gave an example of some offshore accounts. Could you elaborate on the process for that? Who sets that up? And kind of give me some ideas. I've not accepted an investor from India yet.
Yeah.
I have a huge database that I can tap into, and I've been hesitant in doing that.
Okay, look, I can tell you, I've got a couple of Indian investors, right? I'm from Pakistan. I got a lot of Pakistani investors as well, but that are domestically based there. Okay, sure. Now both countries have the exact same issues. This bureaucracy, which is crazy. Okay, so in the case of a lot of Indian investors and Pakistani investors, I know what they've done is that they've moved a lot. Again, this is just from my experiences. Sure. Everybody, a lot of them have moved their money to basically the UAE, right? And the issue becomes that ever since FATCA, it's basically, that it's what I'm talking about, right? It's a banking thing that happened where you have to prove the source of your money. Ever since that happened, a lot of these people, what they're doing is they are slowly moving their money to jurisdictions like Dubai, say the British Virgin Islands. Once you have your money there for a little while, 6 months, a year, then they start slowly bringing it to the US. And a lot of times what happens is, let's assume you're an Indian businessman, your kids are going to go to school, say in New York or Stanford, wherever they go, right? So what you'll do is a lot of times you use that as an excuse to basically start sending your money, more and more money than would be needed. Let's assume your kid only needed 20 grand, you will start sending 100 grand, right?
Got it.
Build up a little pile and then you go. The reason why I mentioned this is because from a sponsor point of view, the issue becomes that, look, we've got like a short window of time when we have to close it.
Correct.
Right? So if you're banking on all this money coming through in 30 days, and the guy's like, look, man, I'm going to the bank. I'm just not getting the approval. The money's there. Then you as a sponsor are going to be in a lot of trouble. Right. So for instance, in my case, what I did is had these conversations much in advance, right? Have a diversified source of both domestic and international investors. So yeah, if the money comes in, that's great. But if it doesn't, I have a backup, right? Which sucks because when you want the money, you really want the money, right? But in the case of countries like India, like Pakistan, Russia, I know, South Korea, China, there are enough basically CPAs, lawyers that facilitate these things that the process is cumbersome, but it's not that hard. If that makes sense.
And most people would know, most competent CPAs would know, it seems.
Yeah, and the thing also is you'd be very surprised if you will see people say in India, some guy who can give you 200 grand, he's a businessman or he or she is a business person. They can just tap their local domestic network and they will know because a lot of their personal network, people say in India,
doing that.
They have already done this thing. Because think about it, some guy or girl in India who's going to give you 200 grand per year, per deal, they're doing pretty well in their domestic country, right? So they have other people in their network more often than not who've kind of gone through this, and a lot of this stuff still works through word of mouth, right? Because a lot of times when you hire these professionals, you're not, look, you want to hire the best person, but a lot of this is a trust-based mechanism,
Right.
So you're going more for somebody who's done it before with your friend, maybe because you have that trust, as opposed to, hey, is this person absolutely the best lawyer on the planet for this? Right. So some of those things are there.
Got it. Hey, thanks, Omar. Appreciate it.
No worries. And yeah, I think Jen can, I don't know, I don't want to speak on behalf of Jen, but I think she can share this recording.
Yes, I already volunteered to share your slide in my replay email. So let me see, Crystal has a question. Go ahead, Crystal.
Yeah, hi, Omar. It's a fellow Canadian here. I'm based in Toronto.
Oh, yeah.
And my question for you is kind of like you've worked all over the world in different countries. What would you say? I was hoping that your presentation would come from the angle of an investor, really. And what would you say are the main compelling reasons to invest in multifamily from a international citizen's taxes point of view?
Well, I can tell you this, because I'm a Canadian citizen as well. You are just not going to get these tax write-offs in the US, in Canada. Basically, our problem right now. I mean, if you're Canadian, I am, but I don't live in Canada. The problem is you can make $1 million a year. If you end up paying 45-50% in taxes, you can never escape that hamster wheel, right? Number one. Number two, you know that domestically, when you're, again, I'm using the Canadian example, right? Domestically, the options we have in Canada to invest, I mean, it's really, unless I guess you're a billionaire, you're really only buying condos if at all, right? Or maybe you buy a house, and I don't know where you live. Maybe you buy it in North York, or I guess you buy it in Oakville or Burlington, or God forbid, Milton. But, I mean, that's your option, right? And then if you buy it, the problem then becomes that I know tons of people who own real estate around the GTA, as an example. And our problem there becomes then that if one of your tenants stops paying you money, then you have to go to the landlord and tenancy board. Mm-hmm. They take 90 days before COVID to even give you an answer. Mm-hmm. But while your tenant isn't paying you money, the bank isn't going to stop getting your mortgage. Mm-hmm. Right. So then you have to do things like cash for keys and all of that. Right. So there's lots of those types of problems. There's not enough investment opportunities. And then the other issue also is like things like accelerated depreciation, cost segregation, all of that stuff. I don't know if you're aware of that. It's basically depreciation on steroids, right? Mm-hmm. We just don't have that in Canada.
Right.
Now, when we get it in the US, as an example, like let's assume you're Canadian, you invest in our deal, right? We do a cost segregation report. You get all that accelerated depreciation. We pass it on to you. So what happens then is for the foreseeable future, because it goes to you when you file for your American and then Canadian taxes, then you have all these write-offs that you can use to offset against whatever other rental income you have.
But does that only offset your American investments, or does that kind of flow through?
No, that offsets your passive, whatever passive sources of real estate you have.
Got it.
Okay. Right. But again, the point is, say, let's assume on 100 grand. Mm-hmm. In Canada, you were doing a straight line depreciation and you got, I'm making this up, so don't hold me to a number, right? You got 20%, right, in total write-offs. When in the US, you'll get 2.5 times that. Right. So for your same dollar, you're potentially making more cash returns and appreciation returns, mm-hmm. but you're also getting a lot more depreciation dollars. Okay. So that's the investment angle. The other angle is that, look, if you're Canadian or anyone for that matter, you're also investing in the US as a diversification issue, right? Because we know this, everybody's been calling for the deaths of GTA real estate for the past, I think, since I've been alive, mm-hmm. right? It hasn't happened, but one of these days is going to happen, right? And you don't want all your eggs in one basket. Mm-hmm. Or Vancouver for that matter, right? Everybody keeps saying Vancouver is so expensive and prices don't go down.
Right. Yeah.
So it's a combination of things.
Yeah. Thank you very much, Igor.
No worries.
Omar, to kind of follow up to Crystal's question, you were saying that they can use their cost segregation bonus depreciation to offset passive income. So for a Canadian citizen like Crystal, like let's say that she has other real estate investments in other parts of the country and she collects the rental income from there, right? That's considered passive income. So I don't know, like for a Canadian, can she use that?
All of those
US
combined? All those pools mm-hmm. go to her. Whatever is her combined, when she files with the CRA, she will just have this pool of losses she can take against her passive income.
Okay, from anywhere in the country or in the world.
Yeah, anywhere. But
Okay.
again, the thing is, you still just be very clear. You
Mhm.
still have to file taxes in the US because again, you're not paying any money, but you got to file taxes, right? And then you'll file taxes in the CRA, and then it'll go to your tax returns.
Thank you
Okay.
very much.
Thank
Yeah.
you.
Again, none of this is very hard, guys. It sounds like it's really hard. It's hard. Like, I mean, like I'm not a CPA, so it would be hard for me to physically do this. But you have professionals along the way that will help you.
Right. All right, cool. And then, Wagner has two questions. His first one is specific to Canadian investors. Per your experience, what would you say is the best approach to invest in US deals?
Well, I don't know. Give me all your money back. That's the best way. I would suggest it's the same way that you would invest in anyone's deals. Number one, forget about what people get very hung up on. Hey, should I use an LP, LLC, personally invest? First of all, focus on when you're talking to somebody who says they can, they're a sponsor. Your number one, in my opinion, your number one focus should be, hey, is this person going to be a good steward of capital? Right? So what you're screening for is competence and ethics. Because as an example, think about it this way. Somebody could be really honest, but they could be a complete idiot. And you don't want that to happen, right? Because that's not going to work, right? Or conversely, somebody could be extremely intelligent, but they're a crook. They're like a Bernie Madoff. That's also not going to work, right? So that's the part you should be focusing on. And then in my opinion, if you're investing as a limited partner, because you probably are investing as a limited partner, in my opinion, unless you have a very specific tax issue or an estate planning issue, which means you're pretty freaking loaded, right? Short of that, invest under your individual name because it's going to flow through to your personal account and personal tax returns anyways. I don't understand why people invest through entities unless they have specific tax and estate planning issues.
Okay.
And there was another one. Thoughts
Yeah.
on leveraging a fund of funds as investment vehicle for international investors. So I didn't really get that. You said thoughts, my thoughts on leveraging a fund of funds.
Yeah, your thoughts on leveraging a fund of fund as investment vehicle for international investors. So
For
maybe like
me-
creating, like as a sponsor, creating a fund of fund so that international investors can, I don't know if it's easier for them to invest through a fund of fund versus, them going and setting up their entity and, finding a CPA to set up their ITIN numbers, things like that.
No, regardless, if I send up a fund of funds,
Mm-hmm.
and because again, like I said, it's a best practice because I don't want to be in the business of withholding taxes and then filing for those. So every time I have an investor, especially Canadians, I can give them to a cross-border CPA that I trust. He can take care of them, make them set up everything, because I don't want to, and I tell them upfront, I do not want to be in the business of withholding taxes and all that stuff. That's not my business. I don't care, right? So even if I set up a fund of funds, as an example, in the US, right? And you want to invest, unless you want to take care of your withholding taxes yourself, at least with me when you're investing, I can't speak on other people, you'll still have to go through the same set of whatever things you would do if you were investing into an individual entity or into individual asset.
Got it.
I don't know. Does that answer your question?
Wagner, does that answer your question? You're muted.
Yes, it does. Thank you.
All right. Thank you, Omar. Yeah, that's great. Anybody else have any questions? I think that's all the questions that we have for today. So yeah, thank you so much, Omar.
Then can I jump on one last question?
Sure, Saket, go ahead.
I mean, I have lots of questions. You've spun my head in a direction where I wasn't thinking. So thank you for this insightful discussion. What percentage of your investors usually on a deal are foreign versus domestic?
So that's a good question. Initially, when it started, it was like very 50-50 or 60-40 tilting towards foreign investors, but now it's more like 10 or 20%.
So initially you started with more foreign investors. Now you have shifted more towards domestic.
No, it's not like I had some design to shift domestic. What has happened is, look, I live in the US, right? So for instance, just by design, the more I just meet more Americans, right? Just by design, because I live here, right? If I lived in Canada, then I would meet more Canadians. So it wasn't like something planned, but I guess if you live somewhere, those are the
that's
people.
Fair. That's fair. So I think the follow-up question from that would be, what are some of your top, maybe 2 or 3, if you don't mind sharing, concerns with Asian investors, right? Because Canadian is similar to US in a lot of ways, but yet different. But in talking about Asia, I think we'll talk about India, Pakistan, or pick any country, doesn't matter, because their concerns are they're very far away, right? What are the hurdles that you usually have to cross to convince them to invest?
Saket, like for instance, a lot of people that I know are either people I've known for a long time, right, or people who come from word of mouth, right, right. So, and again, I think this might be a filtering mechanism in the sense that because I was in finance, most of the people I knew in India, Pakistan were people who were already in finance or had families who were somewhat fairly financially sophisticated, right? Yeah. So, for instance, if I was talking to some, say, random guy in Delhi, right? Some businessman is a local businessman, he's never going to give me money, right?
You pick that state, that's where I'm from.
Yeah, right. So if I was in Delhi, man, and I was talking to some local guy who's a good businessman locally, but he's never going to go to the US to invest, right? Then it would be much harder doing that sale. That sale process would be way harder, right? Yeah. But if I'm, for instance, like I was in investment banking for a little while. So obviously all the Desis, as an example I met, were all in investment banking, right? So they were fairly financially sophisticated to begin with.
True.
Right. True. So even if their parents lived back home, they knew all of the jugaads, as we say, right? So you understand? So now when their investors come through, right, or people they know come through, there is a very high probability that number one, because it's a word of mouth referral through a closed network of people, number one, the trust hurdle has gone away. They're not,
right.
I mean, Desi people will do it all the time, you know this, but they are less, it's less confrontational in the sense that they're less trying to test me out, because I'm coming through a trusted source.
Correct.
So the if you want to use crude terms, the sales process is much simpler. Yeah. Than if it was I was a stranger, nobody knows about me, and it's a cold call.
Got it. No, thank you. Thank you for sharing that, Omar. Appreciate it.
Omar, so you mentioned, I guess, CPAs and attorneys. Is there anybody that you would kind of recommend, somebody who can just help in general?
So that depends which jurisdiction you're in, right? So for instance, if you're Canadian, you can use Elliot Millick. He actually moved down from Montreal, Ottawa, I think, to Boca now. You can use him. You can, I don't know if I don't have his email right now. If you email me,
worries. Yeah, I can share that in our replay email as well. If you maybe have,
you can reach out to Elliot Millick, shout out to him. He's a great guy. But again, it depends what country you're coming from. So if you're coming from, say, a Qatar, I mean, it's going to be a different guy.
Oh yeah, for sure.
Find a guy, but that'll be a very different guy. So that's on the CPA side. On the attorney side, you can use any, in my opinion, any experienced securities attorneys, as long as you give them and tell them, hey, I have foreign investors, so I've got to have all the disclosures signed, and make sure they kind of do it. Most people, like say Dugan as an example, you know Dugan.
Yes.
Dugan will just click on check that disclosure box off. Again, it's not like the person has to do a lot more work. They literally just have to check a couple of boxes, but they have to know the boxes exist there for them to check it off. Right. If you don't know the box exists, it doesn't really matter, right? So that's kind of an argument.
Yeah, so just to summarize, from the investor's perspective, they need to find a cross-border CPA, and then they also need to find an attorney to help them set up an entity in the US.
This is a best practice, unless you want to be in the business of withholding taxes. If you want to be in that business, and lots of big firms do that, because you understand, the more hurdles you put in the way, the more friction there is, right? So you tell somebody, hey, you want to create an I-10, there's a good possibility that person says, I don't really want to do this investment, right? But that's a path that I've chosen for myself, because I don't want to be dealing with the government about other people's affairs, right? So you don't have to have an I-10. Somebody could literally sign an agreement sitting from India. If they have the right approvals and all of that stuff, they could literally transfer you money from Delhi. You're good to go. You don't have to have an I-10. But in my opinion, I decided, look, I'm not going to get into that business.
Got it. Yeah, that makes sense. And then so for on the sponsor side, obviously, you know, for every deal that we do, we always have a CPA and an SEC attorney. And it seems like the only thing, you know, as a sponsor that we have to make sure that our SEC attorney does is make sure that, you know, on the PPM, there's that little disclaimer for the.
I think it's Reg S or whatever it is. They have to disclose that when they're filing certain documents with the lender, they have to disclose this thing. To be honest, I don't even think anybody notices or cares. This is just in the off chance you get audited. You just want to make sure your paperwork is in order.
Okay, great. Okay. Yeah. And I think, you know, most, because we work with Dugan as well, these are, you know, typical things that's already included in our PPM anyways. We don't have to remind him to do anything extra.
Yeah.
Yeah.
But again, it's just good to have on your checklist, right? Because what you don't want is to assume the other person's going to do it. They forget to do it, and now you're doing this thing.
Right. Okay, that makes sense. And then I guess one other question about accreditation. What about accreditation for foreign
Oh,
investors?
they have to be accredited. They have to be.
Oh, okay.
It's the same. Yeah. So because I'm assuming you're all going to be filing in the US. So if you or I are creating a fund, that's a US based fund, right? So the same, like that same accreditation stuff, that same benchmark applies whether you're in India, Pakistan, China, doesn't matter. You've got to be making that, if you're filing jointly, 300K. And you don't, I mean, as long as they can get a CPA, a lawyer, stockbroker, somebody in their own country, right, who says a registered CPA, every CPA will have a number, right? As long as they sign that letter and say, hey, this person's accredited, you're good to go.
So what about for 506B deals where they don't need to be
B, they
accredited?
don't have to be. No, B, they don't have to be. Yeah, B.
Right. Okay. So
I'm
the same rule
typically only do
applies.
C, so that's why. Yeah.
Right. So the same rule applies to foreign investors as it does for US investors.
Yeah.
Yes.
Because
Okay.
the reason is because we're filing for, at least in this case, we're filing for our fund or our entity, which has the PPM and all that in the US. So US laws still apply in terms of accepting money. Basically, that's it.
That's great. Thank you so much, Omar. That's all the questions I have from my end, and I don't see any other questions in the chat box. So I think we are good. Thank you so much, Omar, for your time today.
No, thank you very much for joining. And look, if you guys ever need anything, please reach out to Jing or I, and we'd be happy to assist you in any way.
Yes, thank you. And I'm going to share your contact information with everybody in your PowerPoint presentation as well via the replay email.
Thank you so much.
Thank you, everyone. Thank you guys. Have a great rest of the day.
Thank you.
Bye-bye.